I get this question a lot if Dubai property price is going for a crash. Today's video will be deep diving into some of the data point to understand the reality behind it. UBS Global Real Estate Bubble Index report has done a research and published a report on top 25 cities. These are all international cities of the world. And they have compared the price of the property alongside the income and the rent of these cities. And based on that, they have come out with their recommendations. Let's understand what is this report and let's understand what does it talks about Dubai property pricing. As you can see in this graph, some of the cities in US like Los Angeles, Miami and Boston has shown a significant rise in bubble risk scores, along with cities like Frankfurt, Amsterdam in Europe. Dubai has also reported 17% price rise in year 2024. However, the bubble risk score in Dubai is still moderate at 0.64 as compared to other cities in Europe and US. Two factors which are extremely important when we understand the risk for any city. Number one is the affordability and number two is housing supply. Now in terms of affordability, the most important thing to be seen is price to income ratio. As you see in this graph, Dubai is one of the cheapest properties in about 25 international cities, as the price to income ratio of a 650 square feet apartment near Business Bay is 6 to 7 times annual income of a skilled employee of a service sector. This price to income ratio was 9 in year 2014, which means the way income has grown in Dubai, the prices have not grown that fast. And if we can compare price to income ratio of other cities in Europe and USA, it is well about 10. And fundamentally, this is the most important factor when you look at that property price is on rise in Dubai, and as it looks, it will continue to rise for coming years because of the affordability. Now, the second most criteria to understand the risk of a crash for any city is to basically calculate price to rent ratio. The price to rent ratio is actually number of years a flat of same size needs to be rented to pay for the flat. If you look at this graph, the price to rent ratio for properties in Dubai is lowest in the world's among the top 25 international cities. The price to rent ratio in Dubai is 15 as compared to average 30 for rest of the world. Let's understand what a lower price to rent ratio signifies in this case. A lower number in this case signifies that there is a shortage of housing in city, and because of that the rent is going up annually, which is on an average 6 to 7% net of all cost. If you look at internationally, the annual yield is between 2 to 3% net of all cost. For example, cities like Delhi and Bombay, where I lived most of my life, the annual yield net of all cost is between 1.6 to 2%, which means if you put up this property on a rent, it will take 50 years to pay for the cost. In terms of housing supply, very clearly there is a shortage because population of Dubai is growing at the rate of 6 to 7% annually, and we are adding approximately 200,000 people to the population every year, which means additionally 60,000 homes are required, which cannot be supplied at this rate. And quite obviously, this shortage is increasing the rent by 18% annually. So when I look at these data points, number one, price to income ratio, number two, price to rent ratio, number three, increasing population, and number four, short supply of housing, there is a clear indication that in spite of the fact that the price went up by 17% last year and 20% a year before, there is enough headroom for prices to go further northwards. Further to add, Dubai is only 5% landmass of UAE. The government's plan of doubling the population from 4 million to 8 million by 2040 is going to be adding lot more demand for housing in Dubai. So considering whatever we have discussed so far, Dubai market is not going for any kind of correction. Even the prices are going to be going further. Some of the best communities are being launched by some of the top developers, and these communities will help investors to make some serious money in the future, as Dubai remains the dream destination for investors all across the world. So within the total spectrum of properties where we have standalone towers, large communities, properties on water, as I said earlier, 5% of total landmass of UAE is Dubai, and within Dubai, only 10% of properties are facing the water and 90% are inland. Some properties are bound to give some of the best capital appreciation in coming years. And if you check my YouTube channel, I have done videos on some of the best properties on the water, on inland, which are likely to give one of the best capital appreciation in future, like Grand Polo and Resorts by Emaar and beyond at Maritime City. I hope this video has helped you to clarify some of the common misconception of real estate market of Dubai and provided you with clearer picture of the market. If you have any questions, please feel free to contact me. My numbers are there in the description below.